Hey, everybody. Welcome to episode number 4 of the Commercial Guys podcast. I'm here with Andrew Schellenberger, my infamous partner in crime.
Hey, guys.
And we have a guest today. Our guest is Ed.Long. Ed.Long is a commercial lender, our favorite commercial lender in the city. And we wanted to bring him along today and have him talk with you all about the commercial lending process. Ed, how are you?
Doing good, Jeff. How about you?
Doing great. Thanks for joining us today.
I appreciate the opportunity to talk.
So why don't you take a few minutes to introduce yourself? I know I gave everybody your name, but there's a little more to you than that.
Yeah, like Jeff said, my name is Ed Long. I'm a commercial lender, business banker over at Fifth Third Bank. I reside over on the Chastain Road, Fifth Third branch. Been here for around 9 months with Fifth Third Bank. Prior to that, I was with State Bank here in Atlanta, and previous to that, Colonial Bank and BB&T. I've only been a commercial lender probably for the last 8 years, and I love it dearly. Just like Jeff and Andrew like the real estate side of it, I love the commercial lending side. But again, thanks for the opportunity to talk with you guys today.
Yeah, absolutely. So you mentioned you love it. What do you love about it?
Yeah.
It's just helping that business owner fulfill their dreams of owning a property,
Gotcha.
for their business. I mean, it's just amazing to see somebody that might be renting today, and then all of a sudden they have an epiphany that they want to own what they're occupying, and just being able to help a person from the beginning to the end to get that property is just something that just satisfies me a lot.
Right.
Uh,
Yeah, very
and I've been
similar to
doing
residential, right? It's better to be a homeowner than a tenant.
Yeah, and I think that's what the most individuals that are renting today. It's like we'll talk about. It's real different on the commercial side, but when you're paying someone else's mortgage on the commercial building, and
Yeah.
it's usually the rent's a lot higher, the price is a lot higher, but when they finally realize the importance of owning it themselves from a retirement perspective, it just makes it easier for them, and I just enjoy helping them in that process.
Good.
Yeah. And can you speak to that a little bit, Ed, of how I know we mentioned residential, but how is a commercial loan different than a residential loan?
Well, because of the price point of most of the commercial properties, it's going to be hard to get a fixed rate for a 30-year term because it'll be too expensive for the individual to buy a commercial property. So what we do on the commercial side is we do like a 10-year term, a 20-year AM. So we're able to get the payment as low as we possibly can, and then potentially refinance it when everything changes in the marketplace. I raise the rate. So that's the biggest difference. Is usually it's not going to be a fixed rate for a long time. It's going to be a fixed rate for a shorter period, 5 years, 10 years, and then the amortization is going to be as long as we possibly can. But that's usually 20 years. Anything above 20 years is going to be SBA. So that's the major difference on the residential and commercial side. Is it's just a shorter term, longer AM to get the payment as low as we can, and then we refinance it when the interest rate changes.
Gotcha.
Okay. And you mentioned SBA. Can you speak to what SBA is?
Small Business Administration. Sometimes a potential client might have a shortfall as relates to down payment, or they might have something negative in their credit report, or they might not have significant capital to invest in the project. So, as my job as a commercial lender is to find out, one, can I do conventional or can I do SBA? And then, once I get to know the individual, get a personal financial statement, talk to them about their down payment, I can see pretty quickly if I need to bring in the SBA to mitigate one of their shortfalls. That's another part of the process that I like is getting the person to the right person to help them with the loan.
Yeah. You mentioned the SBA. Obviously, it's a specific type of loan. Residential agents in our podcast, we like to kind of speak to residential agents. That's really the purpose of what we're doing, is to kind of help educate them in the commercial world. So, residential agents are used to hearing FHA, VA, USDA, conventional, all these types of other loans. So is the commercial world the same where there's different types of loan? I know obviously SBA is different, but is there different type of loan structures that might, maybe be available for different types of scenarios?
Yes, there are. conventionally, of course, is what I focus in on. I got partners on the SBA side, but some of those loans are going to be short term, uh, 5 years, 10 years, and then I put them in the appropriate amortization to get the payment where it needs to be. But conventional is the main focus on the commercial banking aspect today. And there's not many more options above conventional or SBA.
Gotcha.
So what would someone need to provide you in order to start that process and get through that process?
Well, part one is just having an in-depth conversation with the client to find out what they're trying to do. As you well know, in the Atlanta market, sellers want pre-approvals. So sometimes the client might have an idea that they want to buy commercial property, but they need to have that pre-approval done in advance. So that initial conversation, finding out more about them, finding out what they're trying to accomplish. And then, of course, the number one thing is, okay, what's your price point from a purchase perspective? And that's where you guys come in. Sometimes individuals have an idea of what they want, but they have no idea in regards to what that's going to cost them. They say, hey, I need a 3,000 square foot building. I need, a certain number of parking spaces. So that's always the hardest part of the entire conversation is they're going to have to give me the start point in regards to what that building looks like in Atlanta today. And then they go to you guys and you go, okay, that's $400,000. And then from there, then I can calculate what the purchase price is the loan amount is going to be based upon their down payment. On the commercial side, 15% down payment is the norm. If they don't have that, then we do the 10%, then we go to SBA. But so that's the main part of the conversation at the beginning is, okay, what's your price point so I can give them the loan amount? Then I find out what their renting is today so I can see because, okay, if they're paying $2,500 in rent, but the mortgage payment that we're talking about is going to be $3,000, then they might have to put more money down into the deal to get it to that price point where they feel comfortable paying that same amount. Because on the commercial side, we're going to pull out the rent payment, we're going to substitute the mortgage payment and see if they cash flow. So understanding that variable too, because they might feel comfortable paying $2,500 a month from a lease perspective, but all of a sudden $3,000 a month, then you're paying your own insurance, you're paying your own taxes, you're paying those other things that you think are rolled up into the loan payment. Your residential, it's all loaned up, all rolled up. On the commercial side, it's not. So they have extra expenses. So they have extra expenses that they weren't used to before. Well, new expenses that they weren't used to before when they were leasing compared to buying. So once you get a good feel of what that looks like, then the process is very easy. Get a personal financial statement. It's basically a 4-page document that tells me everything I need to know about them as an individual. Now, if they're 100% owner of the business, then I can include business information as well. But it's a snapshot in regards to what their assets are, what their liabilities are, what their liquidity is, what their net worth is. And it gives me an idea in regards to where I'm going to get the down payment, for that 15%. If they don't have it, that's fine because it's different than on the residential side. They have to source the funds. They don't have to source the funds to me. I don't care. If they're going to go through that process, I'm going to know they're going to be able to find the money in order to satisfy that down payment requirement. And then it's usually 2 years of business tax returns, 2 years of personal, 2 years of business, 2 years of personal, information on the property, and just get it to me, and then I can work through the process to get them pre-approved.
Gotcha. That's a lot more complicated than what we see on the residential side, and that's something that I've run into quite often. Is you're out in the world and you're dealing with an agent that maybe doesn't understand the commercial lending side of it, and I've had commercial agents, ask me for a pre-approval letter, right? So that's not something that the commercial world does, correct?
We do it, but it's through complete underwriting.
Right. So
because I do talk to a lot of residential agents that think, hey, can you give me a pre-approval letter for this client? It's like, well, no, it's full underwriting. I have all this stuff, and they have to be evaluated to see if they're credit worthy.
Correct.
Because if I'm gonna give a document that has my signature on it to you to provide to the seller's agent, you're going to want to know that that's letters worth the piece of paper it was written on. So on the commercial side, it's full underwriting for that pre-approval because it is such a lengthy and time-consuming process compared to residential.
Yeah, it is.
I mean, most
I could pick up the phone right now and get a pre-qualification letter from a residential lender within, 30 minutes in most cases. So what we end up doing is when we go under contract, or we end up trying to prove to our sellers, if we're on the buy side, that we have a credit-worthy tenant. We've got to prove some other way. We've got to. There's more leniency there in the commercial world because, like you said, they're going to find the money. They're not in this to drag this out. Sorry, got a little bell going off over here. So they're going to find the money. They already know that they're qualified. They know what this is going to entail to get this done. So getting a pre-qualification letter in the commercial world doesn't happen. So we talk about loans, and right now everything, kind of hinges on interest rates just because of the world we're in. But there's different terms to loans. There's the length, there's the interest rates, the monthly payments, and I think you pretty much already spoke to the terms and the length. But interest rates, is it something that kind of mirrors the residential world?
It does not. Previously, there are usually 2 percentage points difference between commercial and residential. The Fed, in their infinite wisdom, is trying to get them more in lockstep with each other. So like Fed rates today, a residential rate today is probably 6.75 to maybe 7. On further rates for commercial, you're probably that 8.75 to 9.25. So you get that 2% spread. But what the Fed's trying to do is the Fed's trying to put them closer together with some of the things that they're doing, and from a Fed perspective, policy perspective. It'll be kind of interesting to see if that happens. But normally there's a 2% spread between the residential and the commercial side.
Gotcha.
And with today's Fed policies, we're hearing out to the market today, higher for longer. So a lot of people might be on the fence in regards, do I want to, take the plunge today and go ahead and buy the commercial property, or do I want to wait until the Fed starts to lower, the prime? But what we're hearing is that when it starts to come down, it's going to go down a lot slower than it went up.
Right.
But we hear this we get weekly updates, and we're hearing higher for longer. So if people are on the fence in regards to wanting to buy that commercial property, we're telling clients today, if you found the right property, get it. You can always refinance that loan later, because as you well know, property is a premium in Atlanta. There's not a lot on the market today.
Right.
It's a seller's market. If they find something that they like, they better jump on it, because it might not be there tomorrow. And then they might have a lot more difficulty finding it later on when the rates are at the place where they want to.
Yeah. Yeah. So, and commercial property is a lot more unique as well. So if it's a specific use or a specific type of building, the next door neighbor's house is not going to come up. It's not going to be that kind of scenario where, there'll be 20 other houses that come up and we're just going to wait. It's going to be that one unique use or that one special building that's just right, location wise and build out wise. So you're right. They have to jump on it. Not only that, just like in residential, when interest rates start to drop, demand's going to go up, and so are the costs of the purchase. So
yeah, and something that we're doing today is I'm doing a couple of commercial loans today where we're putting on a variable rate, because I know the rate's going to be coming down summer of next year, potentially, for that initial decrease of 25 basis points. Hopefully it'll be more, but I doubt it based on what we're hearing.
Right.
So it's like, again, it's my job to figure out what's the best for the client based upon the market conditions, just like you guys do.
Yep.
So putting them in a variable rate instrument today on a purchase on the commercial side is not something that most people do, but it's something that can be done, because we know the rates are going to be where they're going to lower in the future. And then you can always fix it later on when we think the market has bottomed out from a rate perspective. I mean, we're hearing that it's going to be 5% is where the Fed wants to get, but it's going to take 2 years to get there.
Right.
So take advantage of the variable rate and let it decrease when the market decreases, and then when you're at the bottom, then fix it at that rate, and then you're in a better position all the way around.
Yeah, it's definitely coming down slower than went up. I can tell you that. Residential seeing kind of a really small trickle downward, which it's been consistent for a few weeks now, which is good, but it will take, like you said, it's going to take time to get to where everybody feels comfortable, but it's good to see some progress anyways on the residential side. We'll hope the same thing happens on the commercial side.
Yeah.
Sticking in Atlanta, if people find the property that they want, it's better to take the plunge and to get it today and then wait for it not to be there when you actually do need it.
Exactly.
And I think one of the biggest pieces also is for your residential agents that you guys work with, when they're talking with their clients, making sure that they have representation, i.e. individuals like yourselves that can help them on the commercial side as well. Because I have a lot of borrowers that come to me and the first question I ask them, well, who are you working with? And they have, well, I'm going to do it myself. I says, well, don't do that. You need to make sure you have representation at the table. So you need to have yourself a commercial broker to help you in that negotiation process, because they're going to be putting themselves at a disadvantage if they don't.
Yeah,
So that's where you guys come in.
That's a good point. We only paid you a little bit of money to say that, so I appreciate that.
it
Will you
would
be
be more
surprised?
for us to actually say us, but commercial brokers good enough.
Yeah. No, I'm just kidding. Yeah.
Well, Ed,
But you'd be
listen,
surprised. But you'd be surprised the amount of people that I have conversations with that they want to buy, but they have no idea in regards to what that process looks like. I can help them from a lending perspective all day long and let them know what that looks like. But there's that front end piece that is very difficult, and especially in the negotiation when you're dealing with a seller's agent, that they have their own representation, irrespective of the seller's agent.
Yeah, and that's important. I'm glad you brought that up, because it is important to team up with a lender that that combination of broker and lender that communicate well, and that's one of the reasons that we asked you to be on this podcast. It's one of the reasons that we do most of our business with you when we have a need for lending, is because we have that relationship. We know you're going to answer the phone. We know you're going to get us the information we need. It's the same with on the residential side. There's brokers there's lenders that you can't ever reach. And then there's the lenders that will pick up the phone 100% of the times that you call. So we appreciate you for being that for us and for our clients. And you want to tell everybody how to get a hold of you?
Yeah, my cell number directly. That's my lifeline. It's 404-226-8680. I respond to most phone calls within 24 hours. And if it's more important for you to reach me right away, just text me. Because my cell phone's always with me, and I can text back pretty quickly compared to call sometimes. And if it's just a warm email introduction to their potential client or a face-to-face, I interact with my client's client based upon whatever their preference is. But that's the best way, is my cell number, because email addresses change every day. Cell phones are there.
I accidentally sent you an email that never got to you. I found that out.
And we'll put all his contact information in the notes of the video. And if I could just plug Ed quickly one more time, we just did a deal a couple weeks ago, and I mean, you were perfect on communication. You were constantly keeping me updated, constantly, getting us, all the way to the finish line. So we definitely really appreciate that, and just want to plug you one more time because you're an awesome lender. So we thank you again, Ed. We thank you again for your time. And Jeff, do you have anything else you want to add?
No, that's it. Thanks for joining us. Our next podcast is going to be in 2024. So episode 5 in 2024. We're going to talk about all the cool things that we think might happen in the commercial real estate world in 24. And Ed, we'll try to get connected with you here more regularly. Maybe a blurb on each one of our podcasts that we can talk about interest rates, or once a month we can get together and just chat about what's happening in the commercial world. So thanks again for coming.
I look forward to it. Yeah, I'll be more than glad to help any way I can and provide information, because information is power these days.
Yeah, absolutely.
Yes,
All right,
sir.
guys, we'll see you next week.